Paul, the virtual investor here, and today I want to talk about the importance of always having private lenders on call for you. All right, with what's going on in this market now, we have a lot of uncertainty and a lot of national lenders have started to pull back. I'm seeing it in deals that I'm selling. I'm seeing it in deals that our students are selling, and just seeing it in general with what's going on in the market. Lenders are pulling back, and lenders are pulling back because the mortgages that they were wrapping up and selling are, buyers are wanting better terms or wanting they're reducing what they're willing to pay for the mortgages that they're selling. So with that, they have to be a little more conservative, and they're being, as usual, over conservative and causing more issues in the market than we really need. As real estate investors, you want to be able to have capital, be able to go out there when a deal is a deal and you see it's a deal, you want to be able to jump on it. It's why private lenders are so important. You're not going to have the same terms with a private lender that you're going to have with one of these national lenders. You may not always get the greatest rate with private lenders, right? You may have to pay 8, 9, sometimes 10% on some private lenders, where some of these national lenders are giving you 6, 7, 8% terms on deals that are 100% financing or 90% financing. So it may not always be the same, but you need to have access to capital. We built relationships with our private lenders where they'll fund 100% of our deal, not charge us points. But we also use lenders that do charge points and that don't fund 100% of our deal. But you always have to continue growing your list, because when opportunity is there, you want to be able to jump on it one way or another. And the cost of capital may be a little bit higher, but long-term is going to be worth it. Let's go back to 2020 when the world locked down. All the lenders stopped lending. They weren't doing long-term or short-term loans. Some of them did a couple of bridge loans here or there, but they were really pulling back. And that kind of wreaked havoc on the market. But what I ended up doing, luckily, I had private lenders. So I ended up buying 8 deals that first month, 7 that second month. So I kept buying and buying. Best thing I did, because that market ended up really taking off, more so than I ever thought it would, right? I did not expect that. I was just hoping for a flat market, nothing big downturn-wise. And the price point of the properties I was purchasing were in a safer zone where you weren't going to get hit with any long-term holds. So with that, you want to be able to make sure that you can get properties and have funding available for these properties as people start to pull out of this market, as you have less competition with less wholesalers, less investors out there because of all the uncertainty. You want to be able to have access to capital. And by having more and more private lenders, you have easier access to capital, and you have more capital to buy more deals and take advantage of these little downturns when they happen here. Because I don't anticipate us going into a huge downturn here. I think it's a market shift. It's a correction. It's normal. And it's not anything that should make or break us, hopefully, knock wood, unless there's a black swan event. But everything looks pretty solid. The demographics still look good. Buyers are still strong out there. They're still looking for properties, and inventory is still extraordinarily low. And remember this, mortgage interest rates are still historically below the average. They're under 6%. Historical average is 8% in this country. So we're in a good position. So continue to buy when opportunity is there. And by doing that, you need to continue to grow your private lender base. All right, guys, I hope you got a lot out of this, and I'll catch you in the next video.